Technical difficulty. Sorry.
That's okay. We are still live on YouTube, my friend. It's okay. Stop loss out on the intro, I guess. Let me bring it up there, Greg, and see if I can share sound on my side. Okay.
Yeah, something happened there.
You bet.
Started playing the old one. Sorry about that.
And that means we're now live here on our YouTube channel. It's Wednesday night, and it is Trade Masters time, where two coaches go head to head, bring some different picks and analysis to the show to compete to see who can find the best picks. And I am the guest here. I'm just putting my host hat right on there, Greg. Greg, come on in here. First off, you are the defending champion. You are the one who gets to talk first. Go ahead, my friend. Set up the show.
Yeah, well, this is awesome. We have a new challenger tonight in Tim Justice. So this is a first time for you, buddy. I'm glad to have you on here. A little new blood in the mix here. So this is fantastic. Just to prep the show here, you guys know that we got two veteran traders bringing 3 picks to you. Basically just any picks. We usually have a delta, a theta, and then a wild card. A lot of fun. And the beauty of this show, and I think this is one of the best improvements we ever made, is you guys are the votes. You guys are the ones that declare the winner. There's no subjugation here or anything. You guys are in total control. So the way this is going to run down is Tim and I are going to throw in 1 pick each. We're going to put up a poll. You guys can get in there and vote, see which pick you like best. We'll try and bring up a little bit of levity and a little humor here after the picks are over.
You got jokes?
I got jokes.
You got jokes? Okay. All right. We'll see if they're funny. Yeah. We'll see.
Well, so sometimes I win on jokes and not on picks, and other times I win on picks, not jokes. So anyway, it's all good. So yeah, we're gonna have a little bit of fun tonight, as always. And again, welcome aboard, Tim. This is great. I've been waiting for some new blood. Tyler and I have had some fierce battles, but I'm ready to take on all comers. So let's do this.
You can beg, I can beg, we can all beg, but it is democracy out there tonight. And if you do like a specific pick round by round better than the other person's, you're going to vote for that. And Coach Greg here and myself, we're going to give you the best analysis we can. Tanyan, the host here, young Tanyan, he will be putting those polls up as we go. So Greg, do we just start with my first pick?
Yeah, you're the challenger. You get to pick delta,
all right.
theta, wild card, whatever you want.
All right. Now, I spent the entire day kind of thinking about this. I actually started yesterday, knowing that I was going to come and challenge you to Trade Masters. Coach Tyler is on vacation. He was the defending champion. He is as a coward as he is right now. And I love you, Coach Tyler. He is bowed out to go on vacation. He's not here this week. So I got a chance to come in and participate. And I'm excited to be here, fired up. I was talking to Matt about it for 2 days. So where I'm going to start is with some technical analysis, and then we're going to get into the options side of it. From what I understand, we're going to go with a delta or a theta pick first, and it's my choice, right, Greg?
That is correct.
Okay. So what I am going to start with is my old friend CRM. Many different reasons. And, I thought about going in a lot of different directions. There's a lot of momentum names out there that I really like. There's great candidates in the option report, stock report over the last several weeks that are still set up nicely. Energy broke out recently. Crude oil still holding on to its gains. It could have went in those directions as well. But I decided to go with Salesforce.com. And there's a reason I decided to go with Salesforce.com after I went through all my analysis, all my watch list, the whole things. Everybody out there knows I love this company. I love this company for many different reasons. I like the fundamentals. I like the leadership. I like the management. I like their revenue model, Greg. I like the fact that they pick up their revenue through subscriptions where they solve problems for other Fortune 500 companies, big name companies that get their automation software, their email delivery software, their Salesforce software, Tableau for data analytics, Slack for communication, you name it. They have several different products that do $1 billion in revenue through subscription on a quarterly basis. Think about that. Now, that's not the reason I'm bringing Salesforce to the table, because I liked them when the stock was in a downtrend for the better part of a year. I liked them when they were neutral back here in 2019 before the pandemic. I've liked them for years and years and years and years. The reason why this is the first pick is a Delta pick for me, starting Trade Masters here tonight as we're heading into earnings season. We had a busy day today. Number one, it's a beautiful technical setup. Okay. Multiple time frame analysis here for a second. Salesforce.com on the weekly chart. You'll notice higher pivot, low, higher pivot, low, break out of the channel, higher pivot, low, all-time high here, Greg, pushing up against a breakout resistance point. Back down to the daily chart. This one has taken off with some momentum here recently. It's not a swing trade. What I'm thinking about here with Salesforce.com is a position style trade using options that you might hold for a month, 6 weeks, and you've got all the way up into this next earnings date. See, there's a lot of great companies out there with good setups here. And Coach Frank, who does, Coach Frank's charts on Friday, he does our onboarding at Tackle Trading. He does one-on-one coaching at Tackle Trading. He famously hates earnings season. Because why? Well, it interferes with all of your trading plans and the way that you can execute, what you got to wait for, and all that kind of stuff. There's a lot of great setups out there. Netflix, for example. I love the next Netflix setup. Little bull flag, but guess what? We got right down here, earnings, 1019. Okay. You could look at something like AMD. AMD, beautiful breakout potential, momentum, reversal characteristics. I like both these setups, but guess what we got down here? Earnings. Okay. 1025. My personal rules when I'm trading is I need 10 trading days between now and the earnings date. That's actually the standard at Tackle Trading, by the way. There are a lot of coaches that will front run a momentum trade it all the way up into it. And there's even strategies, and I might even have one on a wild card round potentially, where you could even play through the earnings, but that's not this. Coming back to Salesforce.com, there's several things I love about the setup. The weekly chart breakout above the all-time high is so clear and so clean. Okay. Long-term analysis, old breakout point, new support point, firing off. You had a 2 weekly candle flag, bringing it right back down in here, firing back up towards resistance and about to push a breakout. This is not just technically lucky, by the way. There's a lot of data behind Salesforce.com. I'm going to give some of it to you right now. They last had their Q2 earnings at the end of August, right down here. Okay. Now that's about 8 weeks ago. We covered it on the halftime report. In that earnings, they blew the doors off the numbers. In fact, I'll read some of them to you right now. $1.48 EPS on 91 cents expectation. Revenue above expectation. Revenue growing year over year. Benioff highlighting and detailing how MuleSoft, Tableau, Slack all did $1 billion or more in the quarter. All of the fundamental backdrop, they've all got buy ratings on almost every analyst. Everybody likes the company right now. Sentiment is clean. And as we're heading into the daily chart, back down time frame analysis, I see potentially a nice trigger up here into a position trade. Now, this is where we're going to get into how to trade it. For me, it's a fine equity play. I own the shares, Greg. I've owned the shares for years, and I'm going to own shares for years of Salesforce.com. It is one I believe in. But that's not the way I want to present it here during Trade Masters. In fact, I was mapping this out in my Analyze tab, building a spread strategy using options, Salesforce.com right here. And I think you can go through the option chain and look at a couple of different details. Number one, I want to be at least December or further in options. But because I think this position trade might last me a month or 6 weeks, I actually want to go further than that. The minimum amount of time I would look for would be the January here, 100 days out, place something in the January strike prices. I actually think you can go all the way out to March. In March, we have a 290 strike call, 330 strike call, bull call spread. Now, for me, this is the perfect way to play a directional play on a stock this size that you're just trading. If you were investing, if you believed in the company the way I did, an investment thesis makes some sense here as well. Okay. So for the equity and all those type of things. But for the show, for the competition, I present a bull call spread on CRM, breaking out of the all-time high, breaking out of the daily pivot point with a 290, 330 March trade. By going all the way out to March, let me get the exact amount of time I have, 156 days. So that's 4 months and some change. I got plenty of time. By using these two specific strikes, 290, I get the 50 delta. That is one strike price out of the money, which I'm comfortable with a bull call spread. One strike price out of the money so that as I get my trigger, that becomes an at the money option. And if the chart moves up over time, it becomes an in the money option. I come out and I sell the 330 strike. 50 delta, 24 delta difference, classic bull call spread. And here's an important part of this. The cost is $1,290. Commissions, whatever you pay for option commissions, okay? Your maximum loss is whatever you spend. So you cannot lose more than what you put in. Your maximum profit is $2,700. Now that's typical of a bull call spread, but there's a little bit of math I want you to think about right now. In a 40-point spread between 290 and 330, whatever amount I pay, let's say I pay that amount, 1290, that amount that represents your cost from your lower strike and the distance of the spread should not exceed 40%. It should be less than 40% of the total spread, okay? Now, 1,290 against a 40-point spread, actually, we'll do this different way. 12.9 divided by, if I can click buttons there, Grego, 12.9 divided by 40 is only 32% of the spread. So my cost for paying for this bull call spread is in line with my rules. It's lower than my rules. It fits every metric I'm looking for from an option strategy perspective. I've got a clean technical trigger on the daily, but the real analysis is on the fundamental backdrop, the trend, and the weekly chart reaching new highs and breaking out. And if I need one more simple little kicker, volatility is at the low end, which is why you're getting a cheaper cost on your spread. If vol does build into the next earnings, it would even benefit the bull call spread even more. Coming back to the risk profile, you can notice that in the Vega relationships here, okay? And if I do hit my strike price on the top side, Greg, you know, even let's say that I do that over the next 4 weeks or so, I've got good profit potential on anything that builds to the upside. Where I have mitigated risk on the downside, I like the trade. It's my first pick for Trade Masters. That's what I got. Greg, you are up, my friend.
All right, sir. I will take the share here. Yeah, I like the pick. There's a couple of issues that I have with it. And we always do this in Trade Masters. Fundamentally, can't argue with it. Technically, it looks fantastic. My only concern with any of it is two things. One is it takes fuel to go up, right? It needs more and more fuel to go up, just like William Shatner in the space shuttle right now. It needs more fuel to go up. So that's the one thing. Now, you know, fundamentally speaking, maybe it's got that fuel, maybe not. I'm not about to go down that rabbit hole. The other part is if the $1,290 is a little bit out of your price range, that would be the only deal breaker for some traders. But other than that, I love the pick. It's well set up. I, however, am going to go the exact opposite way. I don't want to have fuel as my push. I want to have gravity as my push. So my pick for Delta round here is Micron. This thing has just been getting beat up. This is strictly a technical trade all the way along, but I think there's a lot of different things that you got to look at here. If you look at the stair-stepping nature of this thing, okay, it fell down, found a level, went sideways, fell down, found a level, went sideways. Look at what we got here. Fell down, expecting some sideways potential here. But after you get below this level that we're at, the 66 level here, the next level down, the next normal logical level down is probably in that $58 to $59 neighborhood there. So there's just really nothing that's showing me that Micron's gonna whip around anytime soon. You know, the NASDAQ even, if I can get my typing to work here. The NASDAQ hasn't really been showing us much, obviously trying to find a base here, but really not showing us that much either. These tech stocks, some of them are doing far better than Micron. This one just hasn't showed anything at all. We're past earnings, we're past the dividend. We don't have anything to concern ourselves with there. The next earnings date is not until December 21st. So not even a hint of a concern here. So what I like about this is the technical pattern. I love how these moving averages are all lined up perfectly, from longest to shortest. That's a bearish setup itself. We've already got one breakdown. I'm expecting another here below 66. I love the fact that we have all of this technical analysis set up. From a sentiment point of view, well, we can see since April till now, the sentiment's just been ugly on this. So again, we need a catalyst to change that, and I don't see any in the work up here. So unlike yourself looking for a position trade, this to me is short and sweet is what I'm looking for in this trade. It's given us an opportunity. Again, I believe it can get from 66 to 58. These strikes that I've chosen, I've gone out 37 days. I'm looking at a bear put spread. So 37 days gives me enough time to do a debit spread and still have enough time to move. Even if it trends sideways, which it has been known to do before, I've still got time to get there. So the trade that I like the most is looking at buying the 65, November 19th, 65, selling the 60. Okay, we're looking at a $1.26 debit here. Okay, so $126, that falls in the wheelhouse of a lot of folks' max loss potential. Okay, I've got two of them on here. I'm going to get rid of this. So if we look at this just from a risk reward standpoint, if you just wanted to let this thing go, if you just left it alone, your max risk is $126. Like I said, you find that in most people's wheelhouse. Here's the beauty of it. If it gets down past 60 at expiration there, you're looking at $374 potential return there. That's way more than 2 to 1. It's probably like 2.2, 2.3 to 1. So our risk reward is perfectly set up here. It's a cheap trade. It's a relatively quick trade, right? 37 days is not that long a time. It's something we have to, be involved with for too long. And again, if I saw anything, any kind of, support, any kind of, slowing momentum, anything at all from this stock, then it would probably, not be as good a trade. But there's just really nothing holding this up. This looks like my fantasy football team. It's just a mess. And so when we see weakness, we got to punish weakness. This is a very cheap way to get involved with a nice directional play there. So that's what I got for you. We've got CRM. We got a nice position trade, a longer term perspective. We got Micron, which has been getting beat up for a long time, looking for another quick hitter to the downside to find some old support here. Get in there. I think Tanya has the poll all ready to go. Get in there, throw your votes in. We're going to tell a couple of jokes here, and then we'll find out who liked round one better, myself or my friend Tim. You got a joke for us there, Tim?
Hey, listen, there are no jokes on a Wednesday evening when the markets are closed. What are we talking about here? This is not a laughing matter. Yeah, I got a couple. Bring it. All right. I whipped up a couple of dad jokes for you. Okay.
Beautiful.
Okay. 100 years ago, everyone owned a horse and only the rich had cars. Now everyone has cars and only the rich have horses. The stables have turned.
Very nice. Very nice. Da-dum-dum. See, that's the beauty of it. We got PG jokes here.
Oh, I felt a courtesy laugh right there. I don't need any courtesy votes out there, but I did feel a courtesy laugh right there. All right. Did you have a joke?
I got a few here. Let me see if I can up the ante here.
Mm-hmm.
All right. A duck walks into a bar and orders a drink. The bartender says, "We don't serve ducks here." The duck says, "I'll pay you $20. The bartender says, "Your money ain't any good here." He says, "Okay, then put it on my bill."
Clever. All right. Play on words. I like it a lot. All right, guys. I don't know who won the joke round right there. I think we all win right there. We all benefit. We all get the benefit from it. Young Tan Man, did we have a results
I
from
think
this.
we'll probably have to give it a minute for some results there.
All right, I'm looking at this. When do we call it? Because I am currently down in this voting. People might be feeling a little bit bearish here. I get it. All right.
Well, you know what? We can go on to we can start the theta round here, and Mr. Tanyan will post the results as soon as it's all said and done there.
No, man, it's done. I think we're locked in.
Oh, is it over? Okay.
Well, I mean, here's the thing. He can close it whenever we want. The poll's been open for a minute. We've got 27 votes. We've got 70% of the audience voting. I'm going to give it a 10-second countdown. Everybody get your vote in if you have not yet. And then we will move on to the theta round. Greg, you win round one. There's no question. Yep, 2-minute poll. It was up there long enough. We got the votes in. Greg won, Tim 0. So now what do we do next?
All right, up to theta round, buddy. Bring your best theta pick. You got to redeem yourself here. So,
all right, let's rock and roll. So, theta wise, there's several things I was thinking about here today. And number one, I really like what's happening in gold right now, specifically gold miners. I was thinking about the entirety of what's happening across the markets right now. I know gold's been out of favor, and at Tackle Trading, we got a lot of people who own gold for long-term reasons, who are big believers in the gold analysis, as a hedge against whatever, could be political risk, could be social risk, could be inflation, could be a lot of different things. I am one of those believers as well. I'm a big believer in precious metals. I know that you are as well, Greg. Gold had quite a Wednesday. As a matter of fact, you had a really interesting pattern. I was talking about Coach Matt today on the halftime report, little inverted head and shoulders. Okay. Now it's not out of the woods yet. We still have pivot point. We still have to get out of the woods. And my trade is not on gold. Okay. Other areas in metals are also developing and turning around. If you look at copper, picking up steam, rolling over, pushing up towards a resistance point, held the 200 period moving average. If you look at platinum, inverted head and shoulders, head, shoulders, reversal. Metals are starting to turn a little bit. I can feel it in the day-by-day performance. I can feel it in the sentiment. I can feel it in the charts. You can see it in the charts. So for me, I went through the entirety of gold stocks out there, and there's lots I looked at. And one of them that I came back to, I continue to come back to, is Newmont Mining. Now, Newmont Mining is a really interesting case study right now for what you could do with it. There's no short-term trade here. You've got earnings out here on the 28th, so I wouldn't want to hold into earnings, on just some kind of swing trade. But if you really think about what Newmont Mining's earnings do, there's no volatility in them, okay? You go back, you look, highlight the earnings reports. Earnings here in July, didn't hardly move. Earnings here in April, didn't really do anything. Earnings here in February, not a lot of volatility. The moves in Newmont Mining are not around its revenue and profit and forecast and all that kind of stuff. News are industry related. They're sentiment related. They're about the metals industry in general, all that kind of stuff. Newmont right now is at a really interesting location, okay? Long-term, and if you looked at this, and you could easily play this with GDX, and there would be an argument for GDX. GDX doesn't have the individual components. It doesn't have any of those things. But here's the skinny. Newmont Mining might be the best gold stock in the sector. It might have the best fundamentals. I know it's on the Tackle 25 at Tackle Trading, where the coaches go through and handpick fundamentally sound stocks. So this is a company that stands out to me from a fundamental perspective within the gold industry. Not only that, you have really good long-term support. We're talking multi-year support. Right here, back in June of 2020, we held support at $52. Here in March, it looks like, of 2021, we actually held support at $53. We've come all the way back down here and we tipped support at $52, $53. This zone has been rock solid. So where's the theta play? Where's the directional play? What is it that we've got here? Well, I've got a theta opportunity. I got it in 2 steps. The very first step is to get confirmation above this candle right here, okay? So this is kind of I wouldn't say a wild card trade here, Greg. It's a theta trade, and I'll show you why. But the way that I like it is I like it if you get the direction to set up. This trend right now the trend lines have been violated. Reversals are developing. The old floor right here can develop into a new, or the old floor right here, which is resistance right now, We break out, we start building trend characteristics that can develop into something new from a pivot point perspective. The way I would want to trade Newmont Mining here, and it's my second pick of the day, is I've gone in and I've built several different ways to play it. First thing, you can just buy the equity. Buy the equity on a breakout. It's an affordable stock, $56 on margin. You're looking at what, $28, $2,800 for 100 shares. If you just have a 2-to-1 margin, different accounts, different rates. If you just pay the whole thing, let's say you're working in an IRA, $5,600 on a gold stock that you get a dividend. It's got a nice 2.5% dividend, paid it forever, by the way. It's a dividend firework company type stock as well. So you get a dividend from it. You're getting it over time. I'm not thinking short-term analysis. I like where Newmont is from a long-term perspective. If you're the type of trader where $5,600, let's say it's just out of your wheelhouse. The way that I see that you can trade this here, Greg, is using the January 2023 leap option. Go to the simulated trades. We look at the option chain. It's 464 days out. Whatever happens with Newmont Mining on a chart, I think I'm going to have pretty good evidence one way or the other within 463 days out. Either this support will hold, we will start to trend, and I can do things with the leap option, or it will fail, earnings will fail, and I can move on. Now, there's a little complexity in this. Might get me floated, might get me to not win the round. I get that. But I'm bringing you guys something I think is a great opportunity at a deeper low point that has legs on it, potentially for months, if not a year and a half, if we can get back into a trend. But it's got to work its way through that. And part of that is going to be earnings coming up. If you play either the equity or the leap, it's a really simple thing to hedge on earnings. Now you got to have the skill set, but you can buy a put option, Greg, sell a call option. And if we do get into that earnings environment, let me reset my risk graph here. You can just collar the trade. In fact, in the chat out there, just write down collar the trade, okay? This is not an earnings play. The concept here is to grab that leap option, Greg, and turn it into a leap covered call, which, by the way, is an underrepresented strategy in the options market. When you buy that long-term call option all the way out in January 2023, that leap represents 100 shares of your right to own it at the money at $55. So I take the leap, I sell calls against it, against my $700 for a year and a half of equity, okay? For not equity, I should say, but for a year and a half of the right to the equity through the leap option. If you have it right here, you can sell those calls against it, pick up $50 a month. In fact, if you look at the option chain on Newmont Mining, 30-day options out, 37-day options out at the money. I mean, we're talking about something that can bring in on a 40 delta, $110, okay? 43 delta, $150. So I can quickly offset and cash flow enough through writing call options as this trend develops, because it's going to be messy. Let's call it like it is. I'm not expecting this thing to go straight back up to the top, Greg. That would not be the premise in a plan like this. I expect it to chop, maybe a higher pivot high, higher pivot low. Got to deal with the earnings. You can collar it there if you want to take the risk out. I personally wouldn't even need to do that, by the way. I'm comfortable with the volatility risk on a company like this to just play it. If it's a long term, not short term, that's different, but I would be willing to just play that. Even if this thing very pristinely works its way up into an uptrend, it's going to have some chop. It's going to have some time, which give you as a trader the opportunity to sell calls against it, cash flow over time, and have a core position in gold mining stocks when the metals industry is starting to show me some bottoming. I know it's a little early on this, guys. I know it's aggressive, but I can map it out in my head to where this could be an opportunity for a long time. I present Newmont Mining a leap covered call as we develop off of the gold bottoms as my theta trade, Greg.
Nice trade, buddy. I looked at Newmont as well, and the deal breaker for me was the earnings from the perspective that I looked at it. I do love the diagonal play on it. You can't really argue with the case for gold as far as I'm concerned. It's been out of favor for a while. It looks like it's coming back into favor. There's a multitude of sentiment reasons and fundamental reasons for that. To each their own on that. So I like the trade, I really do. Yeah, there's nothing I could say about it. It's a decent trade. You know, going out that far, it would be difficult, even with the fluctuations and volatility, to not be at least able to sell enough credit to get back to back to even anyway. So yeah, nice job. I like it. I'm going a little different route here. Very similar kind of look, but a little different route here. Going to one of my favorite dividend payers of all time. Hormel Foods here has just gotten taken out to the woodshed recently. It's come back into this old area of support. Essentially, we're at exactly the same price we were 3 years ago. The difference is you've collected 3 years of dividends here. Now we're at a price point where I absolutely think it's fantastic. Come down. One of my favorite patterns in all of trading is the rounding bottom, which is exactly what we saw in Newmont Mining as well. That's exactly what we got here. We got a little W pattern before it broke above the 20. It's above that now. Expectation is I think it's going up to at least the 50 before it runs into resistance again. So you've got a lot of things going for this from a reversal perspective. Okay. Now the piece de resistance on this one is the dividend information. This is Hormel Foods. It only pays a 2.32% dividend. That might not seem like a lot of money, okay? That might not seem like a massive ROI, but there's a few things that matter. Dividend payout ratio of 61%. What that means is only 61% of earnings goes to pay the dividend. That means they have 39 other percent to grow the business, do stock buybacks, basically whatever they need to do to grow the business. This is the big deal. 54 years in a row, this dividend has increased. You get rewarded to be a shareholder, okay? It's been paying dividends since 1928. This thing, in my estimation, is a rock star of a dividend payer stock. These are the kind of stocks I like to own, okay? These are the kind of stocks that, hey, if you sat here looking at this 3-year weekly chart and it did nothing for 3 years, but you collected increasing dividends every year for those 3 years, could you be happy? Well, yeah, because you could probably sell some covered calls. You may even sell some naked puts. You got lots of things you can do with this. All the meanwhile, if you own the stock outright, you can sit there and collect the dividends as well. What I like about this is the base that this thing is found. The recovery of this is, by the way, a weekly chart. So it's found some really good, 3 weeks in a row, it slid sideways. Now it's working its way higher on a weekly chart. Now we go back to the daily chart. It's already, made the turn, got above a couple moving averages, got some room to run up here before we run into resistance here. So a couple of different ways, like you had, Tim, to play this kind of game. If you are a dividend hound and like myself and you want to own the stock, well, if you bought the stock tomorrow, the dividend ex-dividend date is in 2 days. So if you just bought into the stock tomorrow, you could be on the roll, I guess they call it, the roster for a dividend right away. So that's one play. There's another play that I even like a little bit better for cash flow, is looking at a naked put here. Okay, if you weren't so inclined to buy the actual stock right here, but you wanted to get to at least participate, the trade I like the best here is November 12th, 30 days out. I like the 41 here. Okay, this is making a promise, agreeing to buy the stock at $41, which is not too far away, but in this case, I believe it's around, what's our delta? Exactly a 30 delta. So you're going somewhat close to the money, but not too bad. And you're getting 50 cents on this. Can I get you to do me a favor, Tim? Can you check what your buying power would be on this for me? Because my buying power on this version of TOS is always messed up.
Sure, buddy. Yep.
I'd like to know what I've got an ROI of 4.4% on the buying power I have, but I think it's much better on the normal buying power.
And are you talking about the 19 November expiration date?
No, 12th of November.
12 November expiration, and what strike again?
41, and you're getting 50 cents.
Okay, so 50-cent credit on that exact expiration and strike. You're looking at about $700 buying power, a little bit more than 10% of the strike. For some reason, probably the higher delta, I'm guessing. What delta do you have on that strike?
30 delta.
Yeah, so you're at a 30 delta. All right, so $50 credit, 713 buying power is what it comes in at.
Right. So what's that come out to? Let me get my calculator out here real quick. So 0.50 divided by
7-8%.
Yeah, divided by 713. So yeah, 7%. So on a rock star of a dividend payer, you can sell a naked put here for 30 days and pick up 7%. I can't beat that with a stick as far as I'm concerned. And worst case scenario, it pulls back to 41. Would I be happy to own this at 41? Sure, I would. That's what it was 3 years ago, and I would collect 3 more years of dividends, right? So with this stock, like I said, you could buy the stock if you wanted to collect the dividend. You could go out and sell a naked put if you wanted. You've got options with this. I really like the naked put. I like to get paid to buy stock at certain prices. If this happens to take off, I'm just happy to collect the 7% over 30 days as well. If you kind of extrapolate that out over the course of the year, you're talking big dollars. So opportunity there. Now, if you wanted to be more aggressive and you wanted to own the stock, you could sell something closer to the money. You could sell the 42. Obviously, you're going to ramp up that ROI if you're happy to put the stock. So then you can boomerang trade it, which we do all the time. So my theta pick is Hormel Foods. Like I said, it checks all the boxes for myself as both a trader and investor. The ROI, I don't think you can beat it. That's my theta pick.
And so do we get to talk about the pick a little bit? Is that the way it works?
100%. Oh yeah. Yeah. Critique away, my friend.
The reality is this is a Coach Greg special. There's no question about it. I like that for many different reasons. The fact that you're approaching a company that you're comfortable with. Traders out there should always do that, by the way. Work with companies you understand their volatility, the nature of how they work, how they perform. Dividend payer, food company, Hormel. Yeah, this is an old money homes pick, right? The only problem I have with the pick, and I think it just needs clarification. You better be willing to own this stock. When you sell a 30 delta naked put, your probability of touch, which means that strike price will be touched in price at some point in the next 30 days, is like 60% on this one, Greg. Yep. So more than half of the time, you will have your strike price go in the money. And as a trader, when a strike price goes into money, you're losing money. So if you're out there and you're watching and you're thinking, okay, am I comfortable staring at my position, watching it in the red because I'm willing to own Hormel? If so, great. The 7% is wonderful for a conservative company. If you're willing to own it and pick up the dividend because you believe in the long-term fundamentals, that's my only caveat. It's not really a critique, just clarification. This one feels like an ownership naked put strategy, not just a one-off for cash flow for me, Greg. That would be the only thing I'd point out.
Yeah, and so again, you'll notice when I did this, I said a couple of times, if you want to own the stock. The other part of this that I think is something to be important is the earnings aren't until the 23rd of November. So this trade would be over before then. And with the technicals that we have here, the expectation that this goes up, so yeah, there is a probability that it could come down in 30 days and touch. But if it actually gets up to the 43, 40, well, the 44 is an absolute key resistance level. If it got up to that 44, you'd be able to close this trade. If it gets up there and reverses, you'd be able to close this trade and take a fair chunk of that ROI off the table if you decided at that point you did not want to own it. So I like the momentum that it's coming off, this W pattern that's already broken out. I like the fact that it looks to me like it wants to go up. But at the end of the day, one of my rules, and everybody's got to have their own rules, is I only do naked puts on companies I want to own. If I didn't want to own Hormel, I wouldn't be doing a naked put. I'd be doing a bull put spread. So that's just kind of the thing that I do. But a great point from Tim there. You need to understand that you have to have an exit plan. So if it touches your strike and you don't like the way the red looks, then you have to have an exit plan to get out if you don't want to own it, or you go into the trade knowing that you do want to own it and that you have the ability to continue to cash flow it even after ownership.
If you're out there and you're a pro member of Tackle Trading, I want you to write something down. Write down the phrase probability of touch. I didn't really want to go through a long explanation of that tonight because we're in Trade Masters, but maybe ask one of your coaches about that in a trader's lounge, or Coach Gino tomorrow in the Cash Flow Club, something like that. It's an important concept. I think it really helps, especially with naked puts, cover call management, that kind of thing. It's something extra on top of probability analysis in terms of deltas. So Greg, I think it's joke time. Is that right?
It is joke time. Yeah, you got one for us?
Man, let's dial in the funny. I mean, that's always easy to do, right? Hey, be funny. Yeah, make somebody laugh. Okay. Let me think about this. I've got a couple here. All right. Do you want a true dad joke or do you want a one-liner?
I love one-liners.
Yeah. All right. This is a one-liner from one of the best one-liners of all time. It's not my joke. It's Mitch Hedberg's joke. He says, I went to see the doctor and all he did was suck blood from my neck. Do not go see Dr. Acula. Halloween coming up.
I was just about to say, how October of you.
I feel like I'm getting courtesy laughs left and right. That's okay. All right. Funny. What do you got, Greg?
All right, I got a few here that I'm going to go over a couple here. So I actually enjoyed that one. That wasn't bad. So last night I was at the bar and the waitress screamed, anyone know CPR? I said, hell, I know the entire alphabet. Everybody laughed. Well, except one guy.
A little dark.
I got a darker one for you.
Right now?
Right now. I brought a bunch of them today. A guy goes up to this girl in a bar and he says, would you like to dance? The girl says, I don't like this song, but even if I did, I wouldn't dance with you. The guy says, I'm sorry, you must have misunderstood me. I said, you look fat in those pants.
Oh, I don't even know why I should be laughing at that. I probably shouldn't. I'm going to stop. Stop right now. All right. Let me think here. The voting is pretty much in here, Greg. Let's give it maybe 15 more seconds. I will give you another one-liner from Mitch Hedberg. Now, this is not mine, but I was on a car trip. This is no joke. I was on a car trip out to Vancouver, Washington in July. And whenever I get out over the open road, I love my Sirius XM satellite radio. And I like flashing through sports channels or talk channels or whatever it is. And I heard Mitch Hedberg telling jokes. And he told me this one. It made me want to go back and look up all his old comedy. He's been dead 20 years, He said, I don't have a girlfriend. I just know a girl who would be really mad if she heard me say that.
That's funny. He's always been great.
He's so good.
His deadpan style is just out of this world good. So.
100% agree. All right. Let's see here. Votes are in, Greg. I think it's official. I think I won that one. We're even. 1-1.
Right on. All right.
1-1.
Let's do this. Special round, wild card. Let's bring it.
Greg, I brought 2 wild cards, and I'm not going to present both of them. I decided to do that just in case we were so similar in analysis on one of the picks or something like that. See where I was going to go with it. So now I got to make a choice. Earnings play, or I know what I'm going to go with, actually. We're going to go with a directional play. Now, let me know if you can see my screen right there.
I can, yeah.
I went to my watch list and I went through all my watch list. I went through my scanning. I went through all the different candidates, all the things I've been tracking for a while. If you're a halftime report watcher, you know how much I loved what Dick's Sporting Goods did the last 6 months. Okay. The company has been on fire throughout the year. And there's several things I want to point out here as I'm talking about the analysis. Start of the year, this stock was down at $60, broke out, higher pivot high, developed into a trend. Earnings season, it would create little upward movement, nice little earnings response here, then a breakout into a trend. Earnings season. Now, look at these 2 periods to me are very important to understand from a performance perspective, and why, by the way, on a daily basis, when on the halftime report, we're going through earnings in such detail and looking at the price response, there's a reason for it. As veteran traders, we know those kind of create opportunities maybe a week or a month or even 2 months down the road from the backdrop of the fundamentals, the sentiment, the trend shift, you name it. Look at this earnings back here in May. Gapped out on an incredibly strong earnings performance. It took a couple months to get into a new technical trend, and then it ran a nice 10% into the next earnings report. Look at this earnings report in August. Gapped out on one of the best earnings report of the entire season, gapped out, took off, nice little momentum trade, backfilled. This one's a tough one, and there's some psychology here that I want to talk about for just a second. I actually took a trade right here, Greg, on this pattern, okay? I got stopped out right there. 20 years ago, 15 years ago when I started, 10 years ago when I was just, 4 or 5 years in, the emotions around a stock that I just lost on might prevent me from taking another transaction. It doesn't do that to me anymore. I just don't get swept up in it as the way that I used to. We all have emotions, but you shouldn't let your last trade impact your next thinking or decision making. Come forward to today. This price action right here, all it feels like to me is that the market has digested that gap. All right. So we gapped out on strength and it was incredibly strong. $5 earnings per share on $2.80 expectation. If you listen to the huddle that I do every day, that's not common. You don't have many companies with a $2 expectation where they come out and put up $4 or $5 EPS, okay, especially companies this size. This company has been crushing it. Not only that, they raised full year, and I've got my notes over here, 2022 guidance by 65% on that report as well. Net sales for the retail were up 20%. There's a reason why the stock gapped up and ran on the report. Everybody wanted it. What happened about the start of September? Well, we know this because we're all traders. The market went through a correction. So Dick's Sporting Goods correction started almost identical when the market topped and started coming back down into its pattern. Now, the market actually has some interesting reversal characteristics that could clean up if they break above 44.30 on the intraday and get back above this 50-period moving average. Come back to Dick's Sporting Goods. Mentally, that all maps out in my head with what has been happening in the market in context to what is going on with Dick's Sporting Goods. I am a very, very big believer as an investor and a trader to keep track of watch lists. This stock has been on my watch list. I've been waiting for opportunities. I've been taking trades on it when I can, even gotten stopped out on the last one. I still think there's incredible opportunity. The topping pattern here corresponded with the 7th of September, came down in a very, very clear downtrend. Lower low, lower high, lower low. No question about that. This one is not ready today, but I want to show you where my eyes went when I started looking at this chart right there on the weekly. Look at the juggernaut trend. This big candle corresponds to that August earnings report where they broke their quarterly sales and earnings records, where they raised their guidance, where they came out and destroyed expectations. So it ran on the weekly, same on the daily, it gapped. It is now backfilled on a deep retracement on the weekly. There's no question. You know where it came back into? Coach Marcus taught me this, the rising 20 weekly. It does have barriers to change here. In fact, if you look at this, there's a very clear line I have drawn right there at about 125. This is where multiple time frame analysis helps you really map out a trend. I go down to the hourly chart, and what do I see? And I'm going to change settings here for just a bit. Go back 90 days, get plenty of time on the hourly. This pivot point here, in fact, I need a different drawing tool for just 1 second. This pivot point right here corresponds with these locations here, which is the intraday resistance from earlier last week, late last week, as well as falling moving average on the hourly chart. 1 hour chart is very important to me personally. I look at that one all the time. And on the daily chart, you'll notice those circles I drew on the intraday. Greg, it all lines up if we get there. I don't have to always know a trade is ready this second for me to map it out. In fact, most traders don't. I just want to know when the technical conditions are met, I have an opportunity that I feel confident in the reward to risk and the trend over time. For me, Dick's Sporting Goods lines that up very clearly because you break, if you can get above that trigger point, it's only 1 ATR away. It looks a little bit away. We're at 119.94 right now, which is basically 120 bucks. The stock moves $4.60 a day. I've got all of that clearing out above 125, by the way. So if we can get above one more ATR above 125, we're clearing the weekly pattern, deep, deep retracement. We're getting above the 9 EMA on the weekly. We're clearing the daily pivot point. We're clearing the hourly pivot points. We are getting back into an uptrend in the context of a stock that is up 100% this year and crushing it. So how do you trade it? Equity on the volatility is fine. If you're comfortable with that, I would have no problem with that. That's not my wild card pick, though. When I heard wild card, I wanted to go a little bit more complex here, Greg. Okay. I like this one with a strategy that is not used very often. And I don't use them all that often, by the way. I use them every once in a while, right? What they say, what I call a bag of tricks strategy. It's called a back ratio spread. Now, what I love about back ratio spreads in situations like this, it's a position trade, right? The break-even line on a risk graph, if you build a back ratio correctly, and I'm going to use, say, orange for it. The black line's break even. Then you've got this little condition here, which is wherever your long options are, is where your maximum loss point is. And it kind of looks like a long call strategy, right? If the stock from where we are right now, if it goes up a long ways, well, I make money. Look at the right side of the risk graph. I make a profit. If the stock goes down a long ways, I break even pretty much. I'm close to break even, and the volatility risk and theta risk, and there's some stuff in there. You're not making money if it drops, but you don't lose big if it drops either. Where you do lose on this trade is if it just sits in the middle and you time decay and you lose from volatility dropping. So your risk in the trade, just to understand it, is whatever your cost in margin is at that exact point. Now, this is what we call a risk graph trade. You better know how to use an analyze tool. You better be an intermediate trader above to even consider something like this, right? And these are, this is just a great one for me personally as a wild card example. I like playing this one, Greg, shorter term, using you could go November, you could go January. I actually mapped this one out with the November options, and I'm going to tell you exactly why. This feels like it's either going to work or it's not, and we will know by then. Very aggressive, only on confirmation, only if the technical clarity actually comes and we get above the hourly, we get above the daily pivots, we get that weekly flag to confirm and head back into the uptrend. Earnings are right here. Not going to hold a ratioed spread through earnings. So from here till there, I've got 5.5 weeks. Okay. I got 5.5 weeks for this one to work, trend, and we'll see how that goes. What I like about it, Greg, and this is where the risk graph comes in. My total cost on a 10-point spread is whatever the margin is. So my risk is $925. My cost is $925. I'm not spending the money, they're holding it in margin. By doing it this way, I actually pick up a small credit, which if the stock drops, and if you go back to the chart, just think about a couple of numbers. Let's say the pivot point doesn't hold. Well, I could see $100 really quickly in its future, or I could see $94 really quickly in the future. So if the pattern doesn't work, I know there's downside, no question about it. But if that pattern doesn't work and the downside comes in, I can manage it. I also have mitigated risk naturally by building it as a ratioed spread. I'm buying 2 call options right here at the 120 strike. I'm selling 1 call option in the money to create a credit. I'm using an advanced tactic on a chart I know is complex. If it's not wild card, I don't know what this pick is. But this is the kind of stuff I do once in a blue moon when I see opportunities arise. If I go up and hit my targets between now and November, and I'll go back to the daily for just a second. Say I get that confirmation, T1, 135 to 37. Maybe T2 is just up at 147, somewhere around there. Look at this, what happens at 135 to 145. At $135, I'm estimated like $750 profit. At $145, I'm estimated at $1,500 profit. My risk is truly to the downside. Now, this is not going to be an accurate portrayal of your true risk. This is why, and I might get floated on this, guys. I know it's a complex trade. A lot of you may have never learned this one. Every 7 days, the time decay is going to hurt me, Greg, if it doesn't go anywhere. If I really don't get movement, I'm going to lose from time passing on those options that I purchased. Directional, speculative, aggressive, with some hedge built into it, though. Naturally, if the rug gets pulled out from under your feet, you have a natural downside that will limit your risk. I like the chart. I like the fundamentals. I like the complexity of it, quite frankly. And I think there's a way to play it very tight and aggressive into that next earnings. Greg, this is my wild card pick on Dick's Sporting Goods.
Very good, buddy. Yeah, complex trade, but good trade. I do back ratios all the time. I love them. The only thing I have to say about that is something you've already said, and this is just one Dick's Sporting Good that's just, it's not quite ready for prime time, but it's close. It's only an ATR away. The only thing that I would say there is the pin risk, which you talked about as well. That's what we call, or that's what I call it anyway.
Mhm.
If it pins right at the short strike, you could be on the hook for $900, and so a couple of things there. You know, if that's too rich for your blood, which for some folks it is, then you better have an exit plan to get out of that. Whether you close it early at your pain threshold or whether you choose not to do this trade, whatever it is, just be aware of that pin risk, because it doesn't happen often because you got both sides. Either side works up or down, but I have had them pin in the middle, and it's not a fun feeling. But yeah, great wild card trade. So yeah, that one there, not quite ready for prime time, but this is the way you talked about that, Tim, is what I like to do when I'm going through my daily routine and I'm looking for opportunities. That's something that goes on a very specific watch list. That's something that's only an ATR away. I will make a specific watch list, and over the next 2, 3, 4, 5 trading days, I'll be watching that thing to see if it goes. If it goes, then trades like that are fantastic. So yeah, nice work there. I got one that's ready to go right meow. So Adobe. All right. This is a high dollar stock. People who know me usually know that I don't play in this space too often. However, this one is very, very attractive to me at this point in time for a number of reasons. Excuse me, much like Dick's, pretty deep pullback here. Looking at the weekly here, came right back down to a level of support there, tried to flush it. Buyers came in and said, hell no, and then bumped it up again, today as well. So I like the price response that we're having right now on this one. What I really like is where I think it can go. Okay. Right now where we're sitting, there's no trade to be had here. This trade here, as far as I'm concerned, needs to break 597. Well, the ATR on this thing is $13. So that's not even a half an ATR away. So this thing could trigger as early tomorrow. This trade is a no-go unless it gets above 597. Okay, let's make that 100% clear. I have nothing to do with this trade unless it breaks 597. If, however, it does break 597, there's a trade here that I think is absolutely fantastic. And my expectation, you can see I drew a line here at 615. That's because we had old resistance back here, new support here, resistance there. It's a key level of support and resistance. It's where I would expect if we get above the 20, we're probably going to get to here before we fail, because there's really not much to stop it in our recent past. Okay, so the trade I like, the wild card trade that I like on this one is going out to the November expiration here, so 37 days out. I like a broken wing butterfly on this one. Now, the way I do these, and there's more ways to do broken wing butterflies than you can shake a stick at. This is just the way I like to do them. I like to go and sell where I think this can go, because it usually gives me the best setup from a risk reward standpoint. Okay, my expectation is if we get to 697, we're getting to 615. So the first part of this trade is I'm going to sell 2 of the 615s. Okay, right off the hop. I then got to buy the wings, because really I don't want to put out $845. Okay, I would never just leave the trade there, but I don't want to be naked. By the way, naked 2 calls at 845. That's kind of crazy if you ask me. So to mitigate the damage, I can go and buy the wings. So I'm going to buy the 605 here. Okay, and then I'm going to buy the other wing out there. And because it's a broken wing, I'm going at different strikes. So I'm going to go to the 620 here. So what I'm looking at here is a $2 debit. So I took an 845 trade, brought it all the way down to $2. This is in my wheelhouse. My pain threshold happens to be higher than $200. If your pain threshold is $200, then Bob's your uncle. You're good to go on this. If we look at this trade from the Analyze tab perspective, this is what it looks like. Okay, our risk we know is $200. our reward, if this thing goes to the moon, so going back to the chart here, if it gets to 615, great, and it turns around, so be it. We expect that. But if it gets beyond that, and obviously we got the 50 to deal with, if it heads back much like Stick Sporting Good does, back to these all-time highs, well, you know what? I want to have that open-sided risk graph, because if this thing goes to the moon, I still want to get paid on the trade, okay? So now the key is, if we look at the 615 level here, okay, this is where the magic is. So I'm risking 200. If this thing pins at 615, which is the resistance level where I think it would stop at a natural point, at a key resistance level, we could look at 700, let's say $750. So you're talking over 3-to-1 risk reward. Now, if we're wrong and it goes to the moon, you're still making 300. Okay, you're still over 100% on it. You know what I mean? You're killing it, right? So I like this because not only is it a cheap trade, $200 risk, which is good for most people. If it's not, then you can always look at putting a stop on here. For me, I just think this trade sets up perfectly. It's 37 days out. We don't have earnings to worry about. I get back to the chart there. Earnings is way out here in December. So we don't have any of that stuff to worry about. Obviously, we just went by earnings there. And like I said, the potential here is it goes way up. If it goes to the floor, you're still out only $200. So you've got a great risk reward here. You've got it's a more complex trade. That's why it was my wild card. It's not as complex as a back ratio, but it's a trade that you can do, and you have defined risk and reward, and you have a real good potential that if it hits where we expect and pins there at expiration, you can back up the Brinks truck on this one. That's my wild card.
Broken winged butterfly on Adobe. Give me that long-term chart again on this one. Couple of stocks really on those last two that are about longer term analysis, need to clear back above some congestion points and all that kind of stuff, but deeper retracements on those weeklies. All right, Greg. I don't really want to critique the trade too much. The only thing I would say is I don't think a broken wing butterfly is any more complex than a call ratio back spread, but you and I could debate that offline a different time. I mean, whenever you're adding legs in here, you're talking about complexity. They both have complexity to them. There's no question about it, especially for any trader out there who's never broken a spread apart, learn how to get in and out of the different components, all that kind of stuff. But that's why it's a wild card pick, I guess. All right. I think we're up for our last one, wild card round. Who you voting for? And, I got one last joke, and I think I don't know, Greg. I mean, I think I saved the best one for last. Are you ready?
All right, bring it, buddy.
How does a hippie polygamist count his wives?
A hippie polygamist.
One Mrs. Hippie, two Mrs. Hippie, three Mrs. Hippie, four Mrs. Hippie.
Nice, you did. You saved the best for last, buddy. Good job.
All right.
Good job. Good job. All right. Well, now I got to bring one. All right. Okay. The Taco Bell Chihuahua, a Doberman, and a Bulldog are in a bar having a drink. When a great-looking female collie comes up to them and says, "Whoever can say liver and cheese in a sentence can have me." So the Doberman says, "I love liver and cheese." The collie replies, "That's not good enough." The Bulldog says, "I hate liver and cheese." She says, "That's not creative enough." Finally, the Chihuahua says, "Liver alone, cheese mine."
You know what I've learned, Greg, is we like puns, don't we?
Oh, for sure, for sure.
We really like play on words, man. In fact, every joke we've picked today, I think, is basically a pun. That made me laugh. In fact, all of your jokes have made me laugh here tonight. All right, guys. And I think we got voting going. I don't know when we call it. I mean, this one's close. This one's really close.
I got a couple more jokes. Let's give them.
Let's give them a chance to vote. Yeah, let's get the votes in here first for sure. By the way, both great picks. I think the entire night was fantastic, Greg. I loved your analysis.
It's fun. Yeah.
Make me laugh, Greg. All right, come on.
All right, I'm gonna do my best here. So a rather confident man walks into a bar and takes a seat next to a very attractive woman. He gives her a quick glance and then casually looks at his new iWatch for a moment. The woman notices this and asks, "Is your date running late?" No, he replies. He said, "I work for Apple and I'm testing the new iWatch Pro." The intrigued woman says, "iWatch Pro? What's so special about it? He says, it has new sensors and sends message to me through my wrist, he explains. She says, what's it telling you now? He says, well, it says you're not wearing any panties. The woman giggles and replies, well, it must be broken then because I am wearing panties. The man explains, damn thing must be an hour fast.
All right. Okay. Greg, you're floated, man. I win. I'm looking at the votes. I think I win. I don't know if you want to let this keep rolling. Voting's been open for 3 minutes.
That's plenty, buddy.
Guys, 2-1. We have a new champion. I don't know. I don't know, man. I don't know.
What were the percentages?
I'll tell you, I'm looking at it. So on the wild card round, we had 33 total votes, 60% to 40%, basically 63 to 36. On the other rounds, the theta round, 82% for Coach Tim on Newmont Mining. They loved the gold pick. They did not like Hormel, at least in relative performance. There's 18%, but you crushed me on the other round, 56%, 44 for Micron versus CRM. Dude, I think you might have won if you stuck with Bears. People loved that Micron pick. They might be feeling a little bit of the downside there, but all in all, I'll take the victory. Well played, my friend. Great job, which means somebody's going to have to come and steal and take this from me. I am throwing the gauntlet down for the coaches at Tackle Trading. Come and get it, my friends. Come and get it. Until then, though, guys, have a wonderful rest of your Wednesday evening. It is family dinner time for Coach Tim here. I'm going to go try some of those dad jokes on my kids and see if they really were funny, Greg. That usually is the good litmus test, by the way. Until then, have a wonderful rest of your day. We'll be back tomorrow on the halftime report. We'll see everybody then. If you've not had a chance to do it yet, make sure you subscribe to the channel. We do this show every Wednesday night. We do a daily show on the market news, market analysis called the halftime report every day, 12:30 p.m. Eastern. Bookmark the channel, subscribe to it, come back and join us.